Crypto prices in focus ahead of the Fed meeting today. As you can see, all of them moving to the upside there, the major cryptocurrencies. So for more on the landscape, we welcome in Kiana Danial, CEO of Diva and author of Cryptocurrency Investing for Dummies. You did the first edition, but you also have the second edition coming out in March as well. Thank you for joining me this morning. So Kiana, a lot of people, they're seeing this rise of Bitcoin. They're saying, is this the time to jump in? What should people be doing with their Bitcoin at the moment?
Well, thank you for having me. And it's interesting because I literally asked on my social media, what do you think about crypto? And the very interesting thing is my first edition of my book came in crypto winter and nobody was interested. And then the crypto boom happened. And then now we're in winter again and the second edition came out. What should they be doing with the crypto they already have is a very different question than should they get in or not. If they already have crypto, depending on what kind of crypto they have, I would always recommend never to sell for a loss. Like that is literally Warren Buffett's first law of investing. I know he's not into crypto, but I actually do apply his investing strategy into cryptocurrency markets. And I typically try not to, I never sell at a loss. So if you have invested in a crypto asset that you were confident in, there was a reason why you got in. Hopefully there was a good reason why you got in. It wasn't like a hype or FOMO kind of thing, but it was like a real reason. You really believed in that asset. You really believed in the ideology and you want to be a part of the future, then you probably want to hold on to it. Now, if you're not in the cryptocurrency market, as the previous speaker was also saying, I also agree that there is a very, very high chance that we are going to be heading into a recession. So we are approaching our portfolios also with a more precaution and allocating and diversifying among other assets as well. And I could go deeper in that if you would like to.
Well, I want to first talk about some of the coins that you do like, because obviously, you know, Bitcoin is its own sort of monster. But then when you look at things like Ethereum and the use cases there, what are the coins that you like at the moment?
So I first heard about Bitcoin about in 2011. I was like, this is way too risky for me. I'm not going to get into it until 2016 that I dove like really into it. And I fell in love with it. And the reason for that was because of my background. And now this may or may not really resonate with anybody else, but I was born and raised in Iran to a Jewish family after the 1979 revolution when the new government of Iran took over. And my dad, before that, he was a very successful CEO of a successful company, had a lot of money in Iran, in the bank account, and in their house, in his office. And after the revolution, the new government came in, seized all of his assets, seized his bank accounts, everything that he had. And I remember even after I was born, like years later, we still were keeping like my mom's jewelry and Persian carpets and like piano, things like that in our friend's house, because at any moment the government would come and raid our house to take anything that we would have. So this went on for 10 years. And 2016, when I was reading about Bitcoin and how decentralized it is, and the government cannot just come and take it from you, because you can, if you have put it in a safe place, that is a crypto wallet. Right. There was like my dad, even if he had like half, like a portion of his assets in something like Bitcoin, if it existed at that time, we wouldn't have had so much problems with money. So in America, it's a little bit harder to understand this concept. But for me, Bitcoin really became something of a safety net, just in case everything goes down.
And to that point, obviously, with a lot of the volatility that we saw from the banks and the fallout from SVB, we did see that flood into it. We did sort of have that resurrected, that narrative of Bitcoin and crypto being a safe haven. But I do want to ask you, though, in terms of what people should be identifying, if they already have crypto or if they're thinking about getting into it, you've identified some of the deadly mistakes that you tend to see people make in this space. Lay those out for us.
Oh, yeah, absolutely. So here's the thing with any kind of investing, whether it's stocks, it's cryptocurrencies, it's bonds, it's private equity, it's real estate. The number one deadly mistake is falling for hype and FOMO. Like that is literally the number one. If you don't understand what the asset is, like if you don't understand what crypto is, until you really understand it, don't get into it just because Elon Musk said so. Or like, we had GameStop, we had this, we had that. falling for hype on FOMO is the number one deadliest mistake. Why? Because even if you like fall for the right hype or right FOMO, and it's like the right good asset to be in, but because you didn't have the fundamental understanding about that asset, and if you're in it for the long game, which is the kind of investor that I am, I'm a long-term value investor. Once things go down, if you only got into that asset because somebody that you know, your like cousin said so, you are going to get emotional, and emotions are what are going to wreck your portfolio. So to avoid that emotion, you need to handle your emotion before anything happens. You need to get in with the right understanding of what that asset is, what it means to you, how much confidence you have in that asset. So that is a number one deadly mistake people make. And the reason why all of these things happen, because, you know, with the SVB, people are like, oh my gosh, high yields, let's go into it. Everybody is doing it. No, I didn't go to SVB because I'm like, cool, but it really doesn't align with my values. So I didn't do that, right? The second one is not protecting your asset. Again, I've been like yelling this out of the roof. You need to have your crypto, like the reason why you have crypto in your portfolio would be for security reasons and for diversification and for protection against the middleman. You need to have your assets in a wallet, in a crypto wallet. A crypto wallet is something like a USB that you transfer your assets, and then now you are the owner. The bank can't touch it, the government can't touch it, and whatever happens to the outside world, to all of the scams or whatever that is happening, your crypto would be safe. So get a crypto wallet. Don't keep it, no matter how much of a high yield they give you.
And Kiana, we only have time for one more, so we're getting your top three here. Just very quickly, as we're running out of time. What is your third?
I would just give you the third most important one. Absolutely, not knowing your risk tolerance. Understand your risk tolerance. Your risk tolerance is not just your emotions; it's your ability and willingness to take a risk. So at Investiva, that is literally what I teach. You need to know why you're getting in to something and measure your risk tolerance, your current financial situation, what your goal is, and then decide whether or not you should add cryptocurrency to your portfolio.
Certainly makes a difference if you're the long-term holding sort of investor. Otherwise, you're panicking every time you see a move in crypto. Kiana Danial, thank you so much for your time here on Yahoo Finance.
Thank you.